What's going on, everybody? My name is Dee Dee.
My name is Tramel.
And today we're gonna come to you guys with a video on naked trading. So at this point, you should already know your basics. And when I say your basics, I mean all your basics, to the point where you can talk to me and inform me as if I've never known. This includes trend lines, support and resistance, what a pip is, major market participants, the different lot sizes, how much they are, all of those pullbacks like we spoke about in the previous video, everything from your IML basics. I hope you use your resources from baby pips to your technical analysis tab to get all that solidified. So now here we are to teach you a strategy called naked trading. Now, what I want you to understand that this strategy, it is different from anything that you hear such as SK5. It is different from any strategy that you hear with any indicators. Naked trading is pure price action. We come to the chart, we mark it up ourselves, and we react based on what the candlesticks tell us to do at our support and our resistance lines. So I want you to take your notes. Note takers are money makers. Go ahead and sit back, relax, distraction free, turn off your phone from all social media, and let's learn this strategy to make you some money in this market. Okay, so what we're gonna do is share our screen, go to a chart, and show you exactly what we do. And the formula basically that we use is called top-down analysis. As you know, I like to refer to this right here, you guys. I'm gonna show you in a second. But what top-down analysis is, starting on a bigger time frame to get a bird's eye view, working your way down to lower time frames. You never want to trade off of just one time frame. And you never want to trade off really small time frames unless you are a scalper. Most of us, if you're a part of QC or money team, the teams are together, we mostly are intraday traders. We enter our trades in the same day and we exited them in the same day for the most part. So with that being said, we're gonna go ahead and jump into it. I hope this is very helpful and I hope that you're ready to take some notes. So let's share our screen. So as you know, we in the Candlestick book. This should be found in the QC information group chat if you're a part of our team. And if you go right here, page 70, time frames and top-down analysis. This is after you found out how to do resistance, trend lines, what the different market structures and everything. We're talking about price action and naked trading right now. So we're gonna go ahead and share our screen. And what Tramel is gonna do for us today, which pair were we on?
EUR.
Let me see, give me 1 second, you guys. Oh, we was on this tab, that's why. Perfect. So we're gonna go right here to EUR USD as we were in the previous video. Remove all drawing tools, and he's gonna teach us how to naked trade doing the top-down analysis. So first things first, we're gonna start on the day chart. Right on your, no, sorry.
I'm gonna write it down for them too.
Listen, let me tell you what you do first. Before you even trade, I want you to always check the news for the currency pair that you're in. We're gonna talk about it later in your trading plan, about your pair that you choose. Whatever pair that you're currently trading, if you're doing it on your own, I want you to always go to www.forexfactory.com. It is very important to check the news before you trade, because the news from any economy can unpredictably make the charts do something that you didn't expect. So you always want to be ahead, point about what's going on. So which pair are we in, bro?
EUR USD.
So we'll look for any EUR news and any USD news. We'll be very aware if the folder is orange or if the folder is red. EUR, you got yellow folder, that's fine. EUR yellow, yellow. EUR orange, 3 a.m. So we want to be kind of aware about that. That is London session. If you know your basics, you know what we're talking about. So I want you to typically stay away from red folder news, preferably. We don't have any for EUR USD. And be kind of like a little aware. Write down the news that you see, the time. And if you like becoming more, inquisitive, you can click the folder for the details, see what it is, what the news is. You can Google it, look it up, how it affects your economy, to see if it'll make it sell, if it'll make it a buy. And what we're talking about right here is more like fundamental analysis, which means the news and how the currency pairs react to news. But just to keep it real basic, just check your news and make sure you don't have any red or orange folder news. Once you check that and you're good to go, and you look at the times, if you do, to stay away from the charts, we'll go to your charts.
And you're gonna go to your day chart, right? Because your day chart is you looking at the overall picture. You're looking at the overall picture in the day chart, and
you zoom in. Sometimes y'all be too close, sometimes y'all be too far away. So let's see here.
Okay. There you go. There you go. So
this is current price for those who don't know. The last candlestick is where price is currently at with that line across the screen. We're on a day chart.
So I'm gonna write these steps out and then I'm gonna show you. So number one step, fake news. Fake news. Number two step, determine the overall picture, meaning trend, right? So you want to see if it's an uptrend or a downtrend. And as you can see, it's in a downtrend, right?
We'll show you in one second. I know the text box is in the way.
Text box is in the way. So the 3, right? Draw, support, and resistance.
Let me see something. Let me type them for you. I don't know if you're gonna read this. So I'm on day chart.
Okay. Day chart.
Sorry, y'all. You're gonna do this. That's all you're gonna do right now?
Yep.
Perfect. So we're gonna make it yellow so they can make sure they see it. Perfect. So he told us that we're on a day chart and we're gonna find the overall trend. We're gonna see if it's in an uptrend, a downtrend, or consolidating.
So is it consolidating? No, it's not consolidating because it's not moving sideways, right? So it's creating a lower high and a lower low. So you're gonna go grab this trend line and you're gonna start from, you want to be relevant to price. So you're going to start at least from January 2019, right?
Well, don't say that because then they're going to always say it got started in January 2019. So we got to break it down. Okay. So when we say stay relevant to price, you don't want to draw something way up here and price is way down here. So when we're looking at the overall trend, you want to look like in the area that's kind of like close to price, relevant. So as he can see, he got our trend line. And what we like to do is we color code what we do on any chart. If we're on a day chart, we'll do everything in red. So we got our trend line. We see it's not making higher highs and higher lows. We don't see an uptrend. It's not ranging or consolidating, but we clearly see lower lows and lower highs. So we know we are in a downtrend.
So I would go grab the trend line from the second toolbox and click it, color code it red, any color you want to, right? Just make sure everything is done. If it's on the day chart, make sure everything's red. If it's on the 4-hour chart, make sure everything's green or yellow, right? So you'll go right here and you want to see 3 touches. You want to see 3 touches. 2 or more touches for a trend line, but 3 touches for confirmation. You see a touch right here, 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 a touch right here. So that's a great trend line. Don't force anything. If you somewhat thought this was a uptrend, I don't know how you would get an uptrend out of this, but do not force anything. If it's not 3 more touches, do not draw it. Do not draw it. Reach out to your team leads. Ask them questions. They should know how to tell you about trend lines and how to draw those, and to make sure your trend lines is right, because your trend lines always gonna come in place. So next thing you would do, right, for beginners, you want to change your candlesticks to lines. The reason why I said lines is because you want to see
what we're about to do is draw support. After you draw your trend line, we're going to draw support and resistance on a day chart as well. And as Tramel just showed us, we're going to switch it to the line graph. And now he's going to tell us why.
And the reason why we're going to switch it to the line graph is because you don't want to see any fake outs with the candlesticks. Those wicks can fake you out and you be like, oh man, the support is way up here because the wick is up there. No, this is going to give us the average of the candlesticks. And you'll be able to see it more. You can see it more clear. So you'll go to the horizontal line.
Remember, keep everything relevant to price. So especially with your support and resistance, you always want to do one above what current price is, one below, and another one either in the middle or somewhere relevant to price. And that's what he's about to show us.
Okay. So Would this be right? This right here would not be a great support or resistance because, you know, price is way down here. You want to be relevant to price. So your step 3, you're going to draw your chart on support and resistance, and you want to make sure it's relevant to price. You want to see where price is having trouble getting at and having it's been supporting and resisting that. And like I said, you want to make sure you watch the video before this one, because that's what we talked about, support and resistance. And you want to make sure that it resisted and supported. So right here, I'm going to mark up my chart, and it's going to be red. And I'm going to mark this support and resistance up because right here, as you can see, it stayed above this line, resisted. No, supported, went back up. Supported, went back up. Supported, went back up, right? Look at this. Look back here, and let's see what this is. April 2017. April 2017, it resisted. Supported right here, shot back up. Supported right here, shot back up. Look back in the past. August 16th, July 16th, resisted. October 16th, resisted.
It resisted below for some time.
Stayed below, right?
And as you can see, as we always tell you, something could be support and resistance. So over here, it stayed under this line as a ceiling. So it resisted this line. Every time it got up here, it stayed below, right? But finally in, which date is this? Finally in May 2017, it broke this line, and now it turned into support. So it was resistance for all this time. As you can see, price stayed below. It broke it. It retested it, and it stayed as support for all this time, yes, which is now. And current price just so happened to be at this support and resistance right here. So we know something major is going to happen, but that's where our patience and our discipline. So day chart, draw your trend line. Day chart, draw your support and resistance relevant to price. So he drew one of them.
And I'm going to draw another one. This would be a great one too. Oh.
There's a lot of times we like to do is draw it at our previous high or our previous low, yes, as well. Yeah. And what we mean by that, you can look what current price is and look at the previous high point. You can do either whatever you want to do. Mm-hmm. There's no right or wrong ways to draw support and resistance. It's what you see in the market. Mm-hmm. And as long as you validate it by scrolling back to see if it was both support and resistance at multiple points.
And as you can see, the reason why I said that is because, look, supported, went above. Supported, went above, right? Resisted back here. Resisted. Look at this. January 2016, resisted. Look.
Every time it got to these lines, it did something.
So your next step. So right now, you should know how to draw your trend line on your day chart. That's the first step, right? Well, after checking the news, you want to see the overall picture. You want to see if it's in a downtrend or uptrend. It's simple steps. I want to break it down simple for you guys so you can understand the process of naked trading and how to get into trades and be profitable. So the third step was the support and resistance. You want to see where price supported and resisted. Look, supported, resisted. Supported right here. Supported this line, zone, resisted, right?
And I'm going to also make a mention, if you don't mind, bro. Mm-hmm. For the people who likes to draw zones or can understand why those are a little bit more accurate, you can just draw your lines and place zones over them. And on the lower time frames, your zone going to look a little bit bigger. Yeah. That way, it breaks your zone instead of just a line, and it can be more accurate as opposed to just a line. Also, you can always press the lock button on your toolbar right here. That way it doesn't move. Another thing we like to do, bro, is tell them about, we mark up our charts on Sundays before the market opens. That way we're waiting for reactions throughout the week. And you only have to make minor adjustments once price moves. Yes. But it's okay if you don't get it marked up on Sundays. Just make sure you do it. So like he said, we did our trend line on a day chart. We got our support and our resistance line on the line graph. So now you wanted to add something to it?
Mm-mm. Go down to the 4.
We're going to switch it back to candlesticks. Mm-hmm. All right. So let me make mention to something. All right. So really quick, I'm gonna ask y'all a question. What trend are we in, y'all? Take a second and think about it. What did we say? We're in a downtrend, right? And so in this downtrend, whatever trend you see on a day chart, those are the trends that you're looking for on the lower time frames when we're about to switch over in a second. If we are in a downtrend on a day chart, and if the market is moving down, it is what, y'all? Selling. Exactly. So if it's a downtrend on a day chart, you're going to look for only sales on the lower time frames. Only sales. Because why? When you're in a downtrend, when you're in a sale, is long sales, short buys. Why? Remember those impulse moves are long sales, and then it's going to temporarily buy. We're not trying to catch these buys on a lower time frame because we don't know how long it's gonna temporarily buy. Yeah. But we're in a downtrend, so we're looking for sales. Discipline. Let's reduce these zones, y'all. And some people have it difficult time zooming in and out of their charts on their computer. If you take your two fingers on your mouse, for most people, you can push it like this or out, and that's how you can zoom in and out like this and move it sideways too. For some people use these plus signs right here. All right, so back to what we were saying. Downtrend on a day chart, only looking for sales. If it was an uptrend, we will only be looking for buys on the lower time frames. So now, after your day chart, we're going to switch to the 4-hour. As I told you previously, whatever you draw on the bigger time frames, you're going to see on the lower ones. It's just a zoomed in version because it's broken down. So for those who don't like their zones, you can take those off, or you can just leave your lines. So we're just going to take the zones off for now for simplicity purposes. We drew 2 trend lines on a day chart.
No, that's the horizontal line.
Wait, that's the horizontal one. Thank you. All right, so we drew 2 trend lines on a day chart. It was in red. As y'all can see, you can still see it on this 4-hour chart. It's still good though, because every time it got to these lines, it did something. Either broken, it's the same thing. It's just broken down version of what we saw on the day chart. So now, bro, you can go ahead and take over. Remember, y'all, we right here at price too.
Yep. So you want to be relevant to price. You want to be relevant to price. So
want to add to this list?
Yeah. So now, this is the 4-hour. All right. And you want to draw 2. Draw 2 to 3 support. And what is it?
One second, Joel. Give us 1 second, Harmony. 1 second.
Okay.
Draw 2 or 3 support. You want to pause it?
Yeah. You have to edit
it. Hey.
Sorry, you guys. We had one of our one-on-one sessions check in with us, but we're back to it. So share our screen again. There you go, Trebell.
So on the 4-hour chart, you're going to draw 2 to 3 support and resistance lines on this 4-hour chart. And I'm going to type it. Draw 2 to 3 support.
We're going to keep trading very simple, y'all. As long as you follow these, we're going to keep it very simple.
Very simple.
So
you want to scoot it back. You want to
switch it to line graph. Remember, you guys.
Switch it to line graph.
Zoom in some.
You want to see what price hat touches at. I see one right here. Think to yourself, you're like, oh my gosh, let me see where Tramel's going to put this at. Right? So you're going to like, I see right here. It's a great touch. We're going to make that yellow. We're going to make our day chart yellow. So we can, our 4-hour yellow because our day chart is red. So as you can see, support it, bought, support it, it bought, support it, it bought,
broke through,
resisted, broke through, resisted. That's actually how I caught my trade. As you can see, it resisted back here January 17th. Resisted, supported, resisted. So these are great lines. These are great lines. And honestly,
these are key areas in the market where price either was supported or resisted. Every time it got here, it did something.
And honestly, as you can see, I only put one line because that's where price is relevant. We're talking about what's relevant to price.
Price is right here. We put it right here. But as y'all know, also, we're in a downtrend, right? So price already passed this area. We put that there just in case it starts going the other way. So now Tramel is going to show you how we put one either a little bit closer to where relevant price is and one below as well, just in case it starts buying to our trend line. Remember, our impulse moves, our pullback. Mm-hmm. And then in case it continues to sell also, mm-hmm. even though we have one right here for the day chart.
Yeah. So you'll put one. As you can see, I put it at the high.
The previous high.
The previous high. And I'm going to put it at the previous low. And that's going to be the area.
Why is that your previous low?
This is my previous low because as you can see, I'm looking back. I could have put one right here, but I have the day chart line, this day chart line or zone, whichever you make, right there. So I was like, I'm just going to put it at the previous low before that one. And I'm going to say it's this one and this one because, look, this is the previous low. It resisted, supported, supported, resisted, right? So this is a great line, and if we scroll back.
I'm going to log out. Let's go up there.
There you go. If you scroll back, then you can see that it supported and resisted this line. So you want to see your support and resistance, as in the basics. If you haven't watched your basic videos, you need to go back to them and repeat. You need to be practicing your support and resistance because your support and resistance is a key element in naked trading. We like our shit naked. Oh. My bad, you guys. But we like our charts naked. That's all we know how to trade. We trade straight price action. This is all it is. So now we're going to switch back. We're going to switch back to the candlesticks. And we're going to zoom in. We're going to zoom in and just go back.
All right. So remember when we taught y'all on the trend line video in the support and resistance line, you look at where price is currently at. We're on the 4-hour chart. So as you can see, it's still respecting that downtrend that we see on the day chart. And if we're on a downtrend, we are only looking for sales, right? And this is where your patience come into play. Because as you can see, it already sold previously.
And that's what we're going to show you guys why it sold.
And this is our impulsive move, right?
Yeah.
So what it may, based on what we taught you already on impulsive move, what it's going to do, pull back. But when this pull back, this is what the market is moving up. So that is a buy. And what did I teach you? Do not counter trend trade. If you are on a downtrend, only catch the sales. Only catch the sales. So right now, it could be pulling back. And you don't really need to catch this buy. If you do it, that's on you. You can't say no one didn't tell you, right? Mm-hmm. So we see a bullish candle forming. We'll talk about candlesticks in a minute. So we're going to just wait, right? Mm-hmm. We're just going to wait. So it could be pulling back into a buy. But as we told you before, we do top-down analysis. So the lower time frames you go to, the more action you can see. So we on the 4-hour. So we can move to the 1-hour chart if we want to. Sometimes you can mark up your own lines on here, or you can do it for viewing purposes. So remember here, we had our impulse move. We had one bullish candle. So let's see on a 1-hour chart a breakdown of what's really going on behind these scenes right here.
Since it's 2 hours left, it should be 2 more candles to form in that 4 hours on the hour chart.
And he see it right here. The time under this current price is how long it's going to take for this last candlestick to form. So we got to make sure we tell them to close.
Yep.
Okay. So we're going to switch to the 1-hour chart. And as you can see, it's making, on this one, it's 37 more minutes to this candle to close. But if you zoom back out, it's still that same downtrend from the day chart. That same pullback we seen on the 4-hour chart that we just analyzed, maybe going back up. And this is where patience come into play. We have another section on entry points, but right now we're just analyzing the chart and marking it up. So on your 1 hour chart, you can draw 1 or 2. What would you suggest? Support and resistance, or would you keep it simple from your 4 hour?
I would just keep it simple. Because when you go down to your hour chart, honestly, your hour chart should add up to your 4 hour chart. So you can make a trade off your hour chart to your hour chart. Long as your 4 hours telling you, that's why you want to go down. It's called top down analysis. You want to go down from day chart. Make sure the day chart is selling. Now you want to make sure the 4 hours is selling. Now then you go to the hour. So now what I'm going to show you right now, I'm going to show you. This is just naked trading. So text real quick. Trade zones. Trade key areas, if that makes any sense. Same thing as zones. Right? Step 2.
So what does that mean, Jamel?
And I mean by trading zones, right? You want to make sure it's at a support and resistance zone or it's at a trend line. Because a trend line can act as a support and resistance.
So let's see here. Let's try to see, put it for the visual learners. The reason why we draw our support and our resistance lines, sorry. One second, you guys.
1 second.
Oh, you rewinding it?
Yep.
All right. So, hold on. I know how to do it. Hold on. But you trying to rewind it, right?
Yeah, we can rewind it.
All right. So we about to rewind it to show y'all visually, but take a look here. We only trade when the candlesticks get to our support and our resistance lines because price moves from zone to zone. It does that. It moves from zone to zone. Don't get too confused or harped on all these lines. Just remember, we're in a downtrend. Your red lines is from your day chart. Your yellow lines is from your 4 hour. So that's where patience come into play. We have to wait till price gets to our support and our resistance lines before we even think about entering a trade. So go ahead. I'm sorry.
Okay. And you got the text up still?
Yes, it's still on here.
All right. Let me so at the zones, it's either gonna break and retest, or it's gonna reject and go the opposite way and turn into a buy or sell.
And we don't predict the chart, we analyze. That's why you have to be patient.
You just go along.
You have to be patient. So you can either wait till price get to your trend line, as Tramel said, to see what it did. Like, of course, every time it got to our downtrend trend line, it started selling. That's how you would have known to get in sales. Or if you miss those trend line movements, you wait till it gets to your support and your resistance line. And next, we're going to tell you how to read candlesticks in a second. But as you can see, you have to wait until it gets to your support and your resistance line before you enter a trade. Y'all get that? So currently, you can say it's at a support and resistance because it rejected this day support line. But now, we're just waiting to see their interaction to see if it's going to come here or if it's going to come back down and continue to sell.
Yes.
It can either reject this and buy or come down here and sell. So what you can do is click these lines, click add alert. So you won't have to watch your charts all day, click like only once, or when it touches it, make sure you have the app on your phone or your email connected or your pop-ups and click create. So when price gets there, it will alert you. You can make one up here, even though you're really not supposed to be catching this buy because we're in a downtrend. If you just so happen to do that, add alert. So you won't have to watch your phone all day. So when price gets there, you can say, oh, let me go look what Didi and Tramel told me to look at. And that's why even on a 1 hour chart,
you can see it better.
You can see interactions more. It'll move faster on the 1 hour before it does on the higher time frames. And that's why you can also draw like a couple support and resistance on the 1 hour. Let's do horizontal line. Tramel's going to finish writing his notes. I do my 1 hour drawings in green. I put it at this previous low. Well, price is already right there. I put it at this previous. Where would I put it? Well, you don't really have to put them on here, but some people do enter off of these. So if I put one right here, why did I put it here, you guys? Price touched several times. I can scroll back and check that green line. It was good. Look, it was resistance down here. It broke through. It was resistance. It broke back over my green line, touched it, kept going. Right? So after you have your support and your resistance line, so say price gets there. This is what Tramel is about to tell you. So now you say, okay, I drew my support and my resistance line. Now what? That's a lot of people questions. Now what?
Now what?
This is what you have to do. When price gets to your support and your resistance line, this is where candlesticks come into play. You have to understand candlesticks and the story that it's telling you.
Yes.
So you about to do break and retest, right?
I'm finished. Yeah, break and retest.
But let's do candlestick patterns.
Oh, candlestick patterns. So your candlestick patterns, you want to see the candlestick pattern you need to focus on. Yep, that's what I was talking about. I was going to rewind all the way back there. So the candlestick patterns you need to be looking at is bearish engulfing, bullish engulfing patterns. You can look at other candlestick patterns, but you want to make sure you're looking at the JCP out. How your JCP out on your phone? You should be looking at your phone like this and be like, okay, this is a bullish engulfing, this is a bearish engulfing, this is a shooting star, you know, this is a tweezer top, you know, this is a tweezer bottom. You should be going like that, you know. So you can use your JCP app. You can Google candlestick pattern cheat sheet. You can click on this, and it literally shows you these. If price is going to buy, these are candlesticks that it can form at your support and resistance. If it may sell, these are candlestick patterns that you can look for at your support and resistance. Personally, so we won't overwhelm ourselves with all the different patterns, we look for engulfing patterns. Bullish and bearish engulfing. Those are one of the most common. Y'all know I like to refer back to the Candlestick Pattern book right here. And this is really all about candlesticks and anatomy behind it. So you can see right here the engulfing bar stick, page 16, first one. What it is, what it means, what it looks like. Then how to trade it. Trading tactics on page 109 all the way to 133. It shows you how to trade the engulfing bar candlestick pattern, how to trade it at the price action signal, how to trade with moving average, look, how to trade at trend lines, how to trade how to trade the engulfing bar pattern. So get your hands on that JCP book and get your hands on, where is it now? Candlestick pattern cheat sheet. So, sorry guys, one second. So as Shamel was saying, I hope we're not too all over the place for people. We wait for price to get to our support. It moves from zone to zone to zone. So wait till it gets to a key area or a key zone. So what happens if it gets to a key zone? All right. So when it gets to a key zone, I'm gonna rewind it back for you guys.
You gotta tell them
what
we're doing. They're gonna be like, wait, what happened?
So all I'm doing is showing you guys
a previous movement that already happened.
A previous movement that already happened. So
if you have the TradingView Pro, you can click replay. Some people don't have it, but you can. So what we're gonna do is go to this zone that happened previously up here, this yellow line. We join our 4 hour. We're gonna show y'all what we're waiting for when we see things. So we're gonna click replay. We're gonna rewind it back as if nothing never happened. So say you was waiting all week for price to get to your yellow zone.
Which it did, right? So price is either going to do two things on the zone, and I'm going to type it out for you. Reject that zone. Reject that zone. Or it's going to break and retest. Those are the two things it's going to do on its own. As you can see, it got to this zone, and I'm like, okay, what is going to do? Okay. I'm like, what is price going to do right now? It's at this zone, and it's rejecting right now. It's rejecting. As you can see, these wicks, it's not breaking this zone. So that means it's a great zone where it's at. And so if that's the case, I'm looking for, right now, I'm going to look for an engulfing candlestick. I'm going to be looking for an engulfing candlestick. And what I mean by that, I want to see a big bearish candle So let me get the arrows for you.
Can you show us what an engulfing? So you think it's going to sell at that zone, right?
I think it's either gonna do two things. Like I said, I just go along with the zones. We're just going along with the zone. So it's either gonna break down, right? Or it's going to break and retest. It's gonna break, retest, and shoot up. So those are the two things what I mean by on a zone. It's either gonna break and retest, or it's gonna reject that zone and it's gonna turn into a sell, because as you can see, it was into a buying candle. It was going into a buying market. It was buying. The bias was in this market and it was buying. So now get to a key zone, and this is when you trade. You don't trade right here. You don't know what the hell the market's going to do. Oh, you do not know what the market's going to do. You do not know what the market's going to do in the between. So you don't trade right here. You trade at zones. So as you can see, this is a major zone. And you're like, okay, what's next? What is next? You're looking for an engulfing pattern now. You're looking for a bullish engulfing pattern or a bearish engulfing pattern. So now we're going to see. We're going to wait for it to play out. Okay, as you can see, right? It broke. It broke, right? But this candle threw a bearish engulfing candle, and it closed below.
What is a bearish? Can you explain what an engulfing pattern is?
So an engulfing pattern happens when a candlestick is closed, a big, like a bullish or a bearish engulfing candlestick is closing bigger to the previous candle. It engulfs. Mm-hmm. So the candle is bigger. So I'm gonna show you a candle, for example.
I can pull up this paper, sure.
Red. Very quick. So
can you show you? I don't know if you guys can see us, but this would be considered a bearish engulfing, because that sell candle, which is the black one, fully engulfed that previous candle. The entire body of the selling candle engulf the previous buy candle.
Yes.
So it's a bearish engulfing.
So yes. So exactly what she was saying. I would go to, as you can see, that's a bullish candle, and I would this candle have to be bigger. That's all they're doing. It has to be bigger. This is engulfing, and it can be vice versa. The bullish candle can engulf the selling candle, right? So this candle is a seller candle. It engulfs the bullish candle. So as you can see, right here, it showed me. Yes, as you can see right here, it showed me that it engulfed this blue candle, and it showed hell of a rejection. Like that means it's not going up. It's not going up. It's not going up into a buy. It did not break and retest for a buy. Right, it closed below. So next thing you want to know, you want to see, like, okay, what's next? You seen a bearish engulfing candle. The next thing you need to see off that bearish engulfing candle, right?
Wait, we're not doing entry points on this one.
Yeah.
So wait, okay. So let me tell you something. I'm about to log that. Let me tell you something. Some people get confused on their own because they think, like, how was I know that's supposed to happen? You have to understand how candlesticks form. Whatever time frame you're on, you have to wait until the candlestick closes. And what that means is when it is done forming, because that's how we get wick rejections. During the time frame, the candlesticks, they fluctuate. So you can think one may be forming, but when it closed, it may close differently. So that's why you wait until we're on the hour time frame. So when this hour closed, that's how we knew this was an engulfing pattern. It closed. That's where patience came into play. So after it closed, then we waited for confirmation that it stayed underneath this line, our zone. In our next video, or in a separate video, we're going to show you how to enter a trade once you get these confirmations. We just wanted to show you the typical the general steps of naked trading. So once you get to a zone, you wait for a break and typically a retest. Now, what a break and retest is, we'll show you visually in a second. But sometimes people say, what if it doesn't retest? If it doesn't retest, we personally don't get into trades. But, okay, so at your zones, you wait for a candlestick pattern. we got our candlestick pattern, right? We got our bearish engulfing. We like, okay, it really may sell because it got to our zone. It gave us a selling pattern.
Now retesting.
It broke it.
Retested.
It retested this line and showed us that it's respecting it by staying underneath. So now let's play it out and see what it did. I can't see.
Our next candlestick would be our entry. This is how you're going to enter the trade. And you just got to practice it. You have to practice it because as you can see, it showed rejection. Now you're looking for a bearish candle again. You're looking for a bearish candle again. And what it did. Oh, gotta slow it down.
Want it a little bit.
How you want it?
I'm not sure. What happened too fast?
So
1 second, y'all. Let's rewind it again. Let's see our bearish engulfing form. You being patient.
Patient.
All
Slow
right,
it down. Right there is your entry. Once you've seen this candle,
confirm their downtrend.
Confirm your downtrend and it closed. That's your entry. That's your entry right there. That's how you're going to enter the trade.
But make sure you watch the entry point video to understand specifically what we're looking for when we enter our trades.
Yes.
But that is your confirmation that
this market's going to sell. That's all naked trading is. Trade zones. Trading zones.
And some people may be confused, like, well, it didn't touch the trend line for the day chart. It got close enough. Like, as you can see, it may not always go up to your trend line before it go back down.
But it was at a zone.
Exactly. So
that's another confirmation.
So we got our engulfing pattern, our bearish engulfing. We waited till it closed. We waited for confirmation that it was going to continue to sell. We would have entered our trade with proper risk management. And then we would just be confident in our analysis and we'll let it play out. So let's see. Tramel, what you think it's going to do? I think your analysis is perfect.
I think it's going to sell.
Let's watch it. It's going to go slow. Whoa, bro, you
and it just sold.
Look, when it pulled back a little, when it made those little bearish, look, people would have been scared now. Y'all trades, when it pulled back a little bit, y'all would have jumped out. Nope. Yes. Trust your analysis.
Trust it.
Because it'll pull back. The market never moves in a straight line. So, yeah, you may be in negative a little bit for your trades. Or, yes, your profit may be going up and down. But you have to be patient. Because remember, we're on an hour chart. So it takes 1 hour for each candlestick to form. You would have been having a heart attack the second this hour. And this hour, it would have started going up some. But you just was patient. Or some people would have met their goal within these first candles, these 3 candles. But some people who were more experienced or seasoned traders would have been patient. Some people would have jumped out because it started consolidating, getting scared. But Tramel and I, we would have held it and been patient. Let's look at what it would have done.
Patience is the key.
Mm-hmm.
Price, think about it. It's either going to do 2 things on the zone. It's going to reject that zone or it's going to break and retest. It's going to break and retest. It's going to reject that zone, in which it did. It rejected that zone. It rejected that zone, and it went for a sell. It went for a sell.
And some people would have met their PIP goal. We'll talk about that more in your trading plan. But some people who have patience, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. It's been a day already with these candles. 24 hours already passed.
Yeah.
Some people wouldn't even have the patience. They would have got out the first 30 minutes
mm-hmm.
and missed out on all this money. Let's look.
It's easy, y'all. Just patience, man. It's
discipline.
Either reject the zone when it's going into a buy. It's going, reject
as
the
you
zone.
Can see, it would have got out. You would have measured it to the next zone at the least. And as you can see, it got close enough, and it's kind of rejecting the zone. And if you were one of the traders, instead of putting lines, you would have put a box over these zones, your support and resistance zones. You would have seen it would have been rejected it, and some people would have got out.
Yeah.
Some people would have stayed in because that was just basically a minor pullback within this downtrend, this impulsive move. Of course, it never moves straight. It pulls back. Smashes your next zone. TP hit if that was your TP. If your daily goal was back here, that's fine. But some people make their TPs their next zones. It smashed it. It did exactly what Tramiel analyzed. It threw that bearish engulfing. It confirmed his downtrend. He got in for a sell all the way to his next zone. He caught all these pips. How many pips is that?
Let's see. I'll go down here. 1, 2, 3, 4, 5, 6, 7, 8. To the 9th tool, right? Click the ruler. Easy 50 pips.
Y'all see that negative 52? That's how many pips that was. 50 pips. He would have caught.
Easy.
By being patient and disciplined. This was held a little bit longer. That was over a day or so, over maybe 2 days. And so some people, if your daily goal would have been 25 pips, you would have met your goal all the way right here, and would have been out. And you would have caught 25 pips. That easy, y'all. Let's make trading simple. So after you do your support and your resistance line, and you wait for candlesticks to form on your on your zones, that's it. We'll show you more on entry point in a second in another video, but that's what trading is. Trading from zone to zone, zone to zone. We'll talk about how you put in your TP and your stop loss in the entry point video, but this is simple naked trading. Just simply looking at price and what it's doing. And so, as you can see, we typically wait for break and retest. We'll show you that in a second. I forgot what I was about to mention to you guys. But let's take a look at the overall pictures because some people still get confused. You can still see it's still in its overall downtrend. It respected the trend line still and sold, but we waited till it got to our zone and we got into the trade. So now eventually, it's going to pull back somewhere at one of these zones. It's going to pull back because this was an impulsive move in the downtrend. We caught our sell, and now it's going to pull back, of course. So you would have been out already because you traded to your next zone. You have anything to add, bro?
No, just patience.
As you can see, even went all the way down to your support line on your day chart. Even though it wicked it, those still would have been pips if you would have got in before it closed. So as you can see, it literally sold through all the zones that we drew our support and our resistance line. And it's rejecting it, and it's going right back up as we analyze because it is in a downtrend. It made an impulsive move. It has to pull back.
Yes.
Perfect. So another thing that people look for, and some people get harped on this. Let's see something. Market patterns. You can also look for market patterns within a market. Once the price gets to your support and your resistance line, or you can go to your Google and type in market pattern cheat sheet. I like this one. The market repeats itself. It makes common shapes, channels, wedges, head and shoulders, double bottoms, double tops. And these pictures literally tell you when you see it forming, you draw a line at the neckline, you wait for a breakout, retest, and it'll go in the up direction. This is called a double bottom, double top, head and shoulders, things of that nature. You have anything to add?
Yep. So the most common market patterns would be double tops, double bottoms, rising wedge, falling wedge, bullish flag, bearish flag, and the head and shoulders patterns. Those are the most common that happens. You want to focus on at least two. You want to focus on at least two of the market patterns, and that could be and that would be me, double tops and double bottoms personally, or bullish flats or bearish flats personally. So we're gonna go find a double top for you guys.
Or head. I like this head and shoulders.
Yes. Oh, look at this. Head and shoulders, right? Let's go right here. Where market cheat. Head and shoulders. You want to see where the head and shoulders? Right here. Head and shoulders mean it's going and reversal bearish only means you have two heads,
two shoulders,
one head. It's gonna retest. You're gonna draw the neckline, and it's gonna retest that and drop down. So I'm gonna click back up here. As you can see, you can come over here to the tools also. It's the fifth one, or the sixth one. 1, 2, 3, 4, 5, 6. The sixth one. And you're gonna draw the head and shoulder. You're gonna go grab the head and shoulders pattern. And when you see that, you draw the left shoulder on the left side, head, right shoulder, down. As you can see, it dropped.
just like the picture told us.
Just like the picture told us. Just like a picture told us. It pulled back also to give us confirmation, because as you can see on the picture, it says that it has to retest before it really drops all the way down, right? So look, it dropped, retested all the way up here, through an engulfing pattern, and dropped all the way down. Those, you want to focus on patterns. If you trade patterns, just strictly trade patterns. Trade patterns at important zones. If you want to trade, and you want to focus on 2 to 3 market patterns.
Or candlestick patterns.
You
can't know all of them.
You can't know all of them. You can't. So
and don't harp on too much of market patterns, but on your spare time, you can choose one from that cheat sheet and just scroll through a pair and go find it. And literally, you can take the brush or anything and just draw it out and see what price did. You can look for double top, double bottom. Sorry, go ahead.
I was going to say, look at this. What she was just about to say, double tops. Look at this double top, right? It's honestly so easy. The reason why I say this a double top, it touched up here, and then dropped. Created an M. It created an M. Sorry. It created an M. Came up, touched, and then just dropped all the way down. And actually, it retested actually into, you'll draw neckline, retest it, and retested that, then drop.
Can you show us what the cheat sheet told us? Because that's exactly what it looked like it did, right?
Yeah.
I'm about to log out. Hold on, you gotta wait to look. All right.
And as you can see, double top, reversal bearish only. You put the line at the top, put the line at the bottom, retest, drop down. Simple. You want to use your resources, which we will be dropping in these chats, and just practice. Go back and see what a double top is. Go back and see what the double bottom is. See what a bullish flag is, bearish flag. Focus on double tops, double bottoms. They're the most common. And focus on zones. It's either gonna reject or break and retest. Look, it's either gonna reject and turn to a sell, right? On the zones, it's gonna reject or break. It's gonna break, right? Like, for example, it broke through, retested. For example, let me show you. It broke through, retested down here. It actually retested heavily right here. And then shot up. Yeah, then it came back down to a pullback, retested and shot up for a buy.
And some people have questions on what a break and retest is. Can you explain what that is, Sherman?
All right. So when you it can be either way on a buy or sell. On a buy, you want to see it break resistance and turns it to support. This line is now support. That's all you're looking for. Once you see it breaks and turn the price has turned into support, then you'll be looking for a bullish engulfing candle. bullish engulfing candle.
Sometimes it can be on different time frames, but
yeah,
there's two types of traders too. Some people just jump into trades soon as it breaks their support or resistance line. Those are called aggressive traders. We like to be the conservative traders. And you can look this up. We wait for a retest because something can break your support or your resistance line. It can be a fake out, and it can actually start going the other way because you were being impatient and you hurry up and jumped in a trade soon as it broke your support and resistance line, as opposed to waiting for a retest, which shows that it respects that area without breaking it again, and that it's going to go in the way that you analyze.
Yes.
So let's see what happens. So even though this is like the day trend, this is the trend line from the day chart. If you zoom in on this candlestick, if you would have got in thinking, you like, oh, maybe this a bearish engulfing that they were talking about, let me start buying. Look what happened. You would have thought it started buying, thinking it's about to start creating higher highs and higher lows, and it came back down and started back selling because you weren't patient enough to confirm a retest of this to see if it was actually going to sell. You jumped right in.
Yes.
And that if you would have been patient, if you would have waited till it broke out, like, let's see if this is a fake out or if it's really about to start buying. If you would have waited for this retest, you would have seen that it didn't retest and respect it. It touched it and broke back through, retested, and continued to sell.
Mm-hmm.
And it stayed in this overall downtrend. That was just a fake out. So that's how we prefer the conservative way. So now that you understand candlestick patterns, market patterns, what to do at your support and your resistance line, make sure you watch the entry and exit point video to know how to calculate your TP and your stop loss, to understand how to actually get into trading what you're looking for on an even lower time frame. So if you have any questions, use your resources, babypips.com, ask question, the videos in these group chats, and be sure to reach out. Excuse me. Be sure to reach out to any team leads if you have any more questions. Is there anything else you want to cover?
Patience. Be consistent. Mark up your charts. Support and resistance is key in naked trading. We're going straight off price action. We're looking at the candlesticks. We're looking at the market patterns, because like I said, the price is going to repeat itself. Whatever it done in the past, it's going to happen again. So you want to, study. You want to study your pair. You want to know what it's doing. Go back and look at what happened in the retest, or wait, when it rejected its zone. Look what happened to it, and honestly, just keep practicing. Watch this video over and over and over again until you understand it, till you understand what I'm talking about. I try to break it down simple for you guys to understand, and that's all I have for you.
Perfect. And just to let you guys know, if you find this difficult or overwhelming, you can use the other strategies such as SK5 or with the Bollinger Bands. But either way it goes, you still need to have a general concept of market structure, how the market moves, market patterns, candlesticks, because either way it goes, even if you use indicators, yes, they help you see what's going to happen, but indicators, they lag. They react after price has already made a move. So you could be missing major things. But if this is hard to understand, and you need like some help after you try it, you can try one of the other strategies. So remember, do not mix all these together, but you still need to understand support and resistance. That's just a fundamental key. So if you have any questions, feel free to reach out to us. Until then, I'm Dee Dee.
And I'm Jamel.
And we see y'all later.